But is it as exciting as it was in the past for Titan? Because for the quarter gone by, EBITDA is below expectations and there is strong growth in jewelry. And what could be the impact of Q3 in terms of festival demand? Let's discuss all that and much more with Mr. CK Venkataraman of Titan. Venkat, let's start with quarterly numbers because there is a decline of 15%. Can you share the big picture for us? Then we'll get into specifics.
Yeah, hi. The biggest impact from a profit point of view was from the customs duty, reduction which happened in July of 24, and I'll just come to that. From a sales growth point of view, quarter two was very satisfying. Our two main businesses, jewelry and watches and wearables, grew quite handsomely in retail, in company sales, even though the diamond jewelry growth was a little less on account of external factors, customer perceptions related to diamonds, and maybe share of wallet issues as well. But the overall sales growth, notwithstanding that, in the businesses as a total was very, very satisfying. However, the profits, as you said, took a big dip, and substantially on account of the losses that we had called out in our last quarterly call as well, relating to the customs duty drop. What happens is that when we import gold through gold on lease, the customs duty part of that price of gold is it's not possible to hedge it, and therefore there's no instrument to hedge it and all that. So it remains open. And whenever there have been customs duty increases over the years, we have benefited from that exposure. But this time there was a significant drop. And so we knew that we were going to get hit to the extent of nearly 600 crores. And we had called out this in our August investor call. And we knew that this would hit us in a big way in quarter two, which about 290 crores of that came and hit. And that was the single biggest reason for the significant drop in the profits. We were aware of it. The losses were slightly more than that 290, but that's because of the, in a way, operations relating to the diamond jewelry business. But all in all, because we knew this big impact item, it was not a surprise to us, and it was not a disappointment either.
Everyone is curious to understand the impact of lab-grown diamond on Titan. I was looking at your numbers and I was also looking at your quarterly update, where you've gone on record and you've said that diamond jewelry, especially the natural diamond category, is contracting. Historically, that's where margins are the highest. So are you likely to make it up what you're losing because of this trend which is shifting from natural diamond to lab-grown diamonds?
Actually, while the potential of the LGDs to become a serious substitute for the naturals in India is very much there, the evidence of that actually is yet to be seen. And our own understanding of the relatively lower growth in diamond jewelry is not really because of lab-grown diamonds, but because of overall, on the one hand, the consumer perceptions relating to natural diamonds continuing value, especially at the very high prices, as well as some of our own doing, if I can say, some gaps in our product strategy in certain price bands, which we have actually fixed in the interim. So while LGD is an important strategic item in our thoughts and in our considerations, it's not a call out at the moment impacting our diamond jewelry business.
One would have assumed the fact that your solitaire sales have declined would have meant that there is perhaps some competition coming in from LGDs, and the studded ratio mix also altered a bit on the negative side. But coming to the margins then, because this time that was the biggest disappointment. It's lying in single digits for the first half of the year. You've cut down the margin guidance, but the street is still questioning the ability to go back to that 11% mark on margins, because the first half of the year has been rather weak. And with the, the studded ratio mix not inching towards the way it was expected. What gives you the confidence that you'll be able to hit that mark of around 11% on margins?
Actually, we had clarified even yesterday on the call that the customs duty adjusted margin for you Q2 was the figure that you speak of. And similarly, the customs duty adjusted for Q3 likely will also be in that ballpark. And therefore, because the customs duty is an extraordinary item which does not have a bearing on FY26 and the rest of the years in the future, we had called this out as a big external inflicted loss in August itself. And it got booked to the extent that we actually sold that inventory in Q2, and it'll get booked most of the rest of it again in Q3. So, but it is an external extraordinary item, and therefore we need to add that back to determine the margin on a continuing basis. And that's what Ashok Sonthalia, our CFO, had clarified on the call yesterday. And therefore, that is the confidence that is behind our statement about the margin on Q3 and later.
Reframe the question and ask you, what could be the exit rate on the margins, let's say for FY25? Could it be closer to 11.5%, 12%? Because at that time, I'm guessing there would be no longer any impact of the custom duty losses?
It would be difficult at the moment to tell you that because the Q4 is some distance away. We are in a better grip on Q3, but your basic point is right that if the customs duty loss in a Q3 is of the order of what we booked in Q2, then the bulk of the customs duty loss would be behind us on January 1st, and Q4 should have the least overhang of that. But it'll also depend on the actual sellout of the inventory, which pieces sell. We may end up booking a little less in Q3 and a little more in Q4 and stuff like that. So I would reserve this response to a later date.
Mr. Venkataraman, I'm just curious as to what you're, going into the festive season with in terms of expectations, given where gold prices are at, where silver prices are at, etc. Are you expecting it to be a bumper festive season? Are you going in with very moderate expectations? And I say festive given that we're already in the thick of things with the wedding season, etc. What's the anticipation there?
Actually, we've been very, very, very satisfied with the way the month of October has turned out, including Diwali, Dhanteras, and all that. And so Q3 has begun on a very good note for us in terms of confidence and optimism. The number of wedding dates in H2 of this year appears to be markedly more than the wedding dates in H2 of last year. And therefore, into December, Jan, Feb should also be good from a jewelry business point of view. The watch business continues to be on a very good run for many, many months, and including actually the performance in October for all the businesses has been extremely satisfying, including the other brands of the jewelry business like Carrot Lane, Mia, and Zoya as well, which we shared yesterday. We did not share numbers, and I'm not sharing numbers today as well, but we are very, very satisfied about October and the outlook for Q3.
Satisfactory. I just want to understand, when you say satisfactory, is it in line with historical averages?
We are very, very, very satisfied.
And what is the definition of very, very, very satisfactory?
It's not our custom to share, figures in the middle of a period, and that's why you need to sort of infer whatever you want to infer.
So you're very, very, very satisfactory. I'll add another very in case I'm missing the whole, communication here. Okay, now let's understand the entire shift. If there is a shift.
Like, yesterday, for example, Ajoy Chawla used the word fantastic. It's like that. So these are words. So it's a very good feeling that, we are.
Great. Nice to hear that. Let's say in 3 years, we see a shift from lab-grown diamond from natural to lab-grown diamond. And your brands are getting future ready already. You've, in a sense, preempted this customer change. There is a shift which naturally will happen towards gold jewelry as well, because that's how the psychology of a buyer would move. If natural diamond prices are going higher, you can move towards gold. If there is a big shift in terms of a trend, what happens to Titan of 2024 versus to Titan of 24 versus Titan of 2027, where it would reach?
It's not an easy answer to give. It will actually depend on Titan's own shaping of this entire thing and the rest of the industry's shaping of this entire thing. We are clearly recognizing the importance of LGD in our lives, and because it is an extremely strategic and important matter, we will reveal things that we plan to do only when we are ready to reveal that. And much will certainly depend on how the industry shapes the strategy relating to naturals and LGDs. And there are multiple dimensions, sitting here: the nature of jewelry that Indians buy, the kind of and the sizes of diamonds that are used in Indian jewelry. Indian jewelry uses a lot of very small diamonds where the piece ends up being a very exquisite piece because of the small size of diamonds. LGDs are still in the large sizes. As you come to smaller and smaller sizes of diamonds, the cost of labor, which is sitting in the production of a small diamond, natural or LGD, that cost will be the same, and the cost of labor in a small diamond is a much higher part of the total cost of a small diamond than in a large diamond, which means that the price difference that is there between LGD and the natural diamonds will dramatically reduce in the kind of diamonds that the Indian jewelry industry uses to make necklaces and jhumkas and bangles and stuff like that. So the whole value proposition that LGD has, will not be there in much of the jewelry that Indian jewelry makes. And unless, technology dramatically, if you would remember that the entire diamond jewelry manufacturing shifted to India, especially the smaller diamonds, because of the labor cost and Surat and Bhavnagar and all that. And therefore, that point is sitting there. The second is that the store of value aspect of LGD and the falling prices of LGD will have a bearing on customers moving from this to that and all that, which means that this is not at all a simple matter, and it's a very, very multidimensional thing which we need to consider, which we are considering, and therefore we are reasonably confident of shaping this, and I'm sure the rest of the industry will also do that, to actually maximizing everything rather than worrying about it.
Before I go to my last question, I saw your Titan eyewear ad, and what a brilliant initiative. My sincere compliments. I mean, the whole idea of getting.
Pass it on to the team.
No, it's lovely. I mean, I just think through it. I was not aware that how many truck drivers needed prescription glasses, but they were actually avoiding that. I mean,
I'm not aware of that.
Yeah,
also.
yeah. One. I mean, so nice to see that powerful campaign. My last question again, and I'm not making this as a lab-grown special, but the curiosity around this entire category is so high that I'm prompted to start with it and end with it. Lab-grown diamond, my understanding is that the prices are going down because you can produce more. Anything that can be produced more, the prices goes down. That is what I just want to bring out for our viewers. So you are in a business where the production will increase and prices, they come down. And for a branded manufacturer, that's great news. That means on branded designs, you can charge more. So what looks like disruptive right now, given where LGD price is headed, do you think this actually could be a higher margin business eventually when prices settle down?
Actually, my answer may not satisfy you because it's a very, very complex question that you're asking. And we are, wrestling with all the dimensions of this, and our final strategy will take into account many of the things that you asked and said. That's the best answer I can give at the moment. It's quite an exciting development in the industry, but we need to sort of make it work from our terms.
Quick questions. A, that means you're open to the possibility of getting into LGDs in a big way at some point of time, because earlier you had stuck a bit to the natural, diamonds. And secondly, what could be the potential studded ratio going forward? Because this quarter it has fallen to around 30 thereabouts.
Honestly, we have not really chosen to say that we are open or we are closed to anything like that, because it is a matter of strategy, and you don't reveal, strategic intent uh, to everyone uh, like that. So you reveal your strategic intent at the time of your choosing. So that's why this point about open or closed, or whatever points we may have made over time. Even yesterday, there were some questions relating to, other companies in the Tata Group and Titan and all that, and we give various answers relating to that. So it's a very big development in the industry. So we're seriously, thinking about it, conversing about it. That's all I can say at the moment, and we'll be ready to share whatever we want to share at the right time. I'm sorry, I missed your last question.
The ratio of the studded jewelry versus, that whole ratio which you talk about, where will that move?
Actually, the challenges in the solitaire category are perhaps a little, longer drawn out because of multiple reasons on solitaire prices and little, worries about continuing value and all that. And therefore, Titan Company and the industry in general has to work harder to actually sort of get back some of that lost growth in the solitaire side. But on the diamond jewelry side, we, like I told you that, some of it were operating improvements that we needed to make, which we have done already. We have seen the results of that already in the last many weeks. And we're very confident that we will certainly go back to the kind of growth rate that we want in diamond jewelry. And obviously, we need to innovate, create new streams of growth in the diamond jewelry to compensate for whatever could continue to be challenges in the solitaire side. And it is certainly our intent to go back to the growth rates in diamond jewelry that we are used to getting reasonably soon.
Really appreciate your time. You've been very accommodative with our request. Thank you for your time. It's well over 15 minutes we've chatted with. Thank you, sir. Thank you very much.
If you like this video, then like, share and subscribe to ET Now.